What if there are not going to be any new highs for, well, all markets until 2030? What if we are facing the dreaded lost decade? Well, that is exactly what I want to discuss with you in today's video. My name's Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel. Leave a little thumbs up too if you appreciate this kind of content. Now let's get into it. So just what the heck is a lost decade when it comes to investing? Well, a lost decade is considered an extended period of very slow economic growth, usually lasting around 10 years long, hence the name, the lost decade. These periods of time are usually the consequences of irresponsible government monetary policies, particularly after an asset bubble has burst. Sound familiar? Ring any alarm bells? And the bigger the asset bubble, the bigger the fallout from it could be. Now, when we have slow economic growth, high unemployment, and falling house prices, as well as a decrease in standards of living, well, it all works out to create basically the perfect storm for a stagflation environment. Now, stagflation can bring about a long and painful road to recovery. We've seen that in the past. Here are some examples of where we've seen a lost decade before around the world. Just a few recent examples. Japan in the 1990s is one of the big ones. It became one of the longest economic crises in recorded history. Of course, we can look at the USA in the 2000s after the dot-com bubble burst in 2001. This saw, for example, Amazon's stock price drop 90% and then took around 8 to 10 years to recover, as you can see in this chart here. And once it did recover, it then crashed again in the 2008 financial crisis. Yikes. During these times, risk assets like stocks give almost zero returns. Zero. It could happen to crypto too. The truth is that crypto has not been around during a time of this kind of financial turmoil like this. Obviously, we do not want that to happen. Again, we don't want a lost decade, but it's possible, thus the reason I'm talking about it with you in this video. So why do lost decades happen? Well, I think we should look at the example of Japan here, because quite simply, the boom-bust cycles we see throughout history, they tend to be orchestrated by central banks and governments with their reckless monetary policies. Some things just never change, do they? Now, these periods, they usually include low interest rate environments, so that basically anyone can go out and borrow essentially free money and then use it to service the public debt. That's what governments do in this situation. So Japan, the example. They suffered a lost decade in the 90s due to a credit crunch, a debt crisis, and a liquidity crisis all at the same time. That was following on from, of course, World War II. Japan boomed with exports, driving massive growth into the economy. Japan was so productive, in fact, that during this time, they were selling more to the United States than they were buying from them, leaving Japan with a trade surplus with the USA. However, the economy peaked in the 1980s and was all basically, well, just downhill from that point on. Having thrown the global trade balance off, they then joined other economies in what's known as the Plaza Agreement in 1985. Now, this meant that Japan had to devalue its currency in order to restore the global balance, meaning they had to resort back to good old-fashioned loose monetary policies in the late 1980s. Then, of course, once they realized that the bubble was about to burst, they switched to rate hikes, causing a recession. The result was that the stock market in Japan crashed, the debt crisis began, and then during the 1990s, Japan's GDP only averaged 1.3%. Ouch. Now look, economists are still out there debating to this day why the fallout from the recession in Japan lasted for such a long time. Some say, well, it's just Japan's aging population. It's all demographics, obviously. Some say it's, well, China and the rise of East Asian countries. Others say, well, it's restrictive monetary policy that got us into this situation. The reality is probably a combination of all three of those things. Now, before I answer the question, are the conditions similar now for, well, the USA in particular, and should we be worried? I want to break the flow for just a moment to let you know about my weekly newsletter, Wealth Mastery. Now, my team and I work very hard to find the latest news and the latest opportunities in the cryptocurrency market for you, from NFTs to altcoins, DeFi, and beyond. You can sign up to that newsletter for free using the link in the description. Now let's try and answer the question. Is the situation now something to be worried about? Well, let's first talk about US bonds, which have actually just had a lost decade kind of event. You see, US bonds have returned 5.79% per year since the great financial crisis of 2008. That, though, compares to 10.32% per year on average for US stocks. Also, we can talk about emerging markets. They've also just had something of a lost decade. This is because the great financial crisis of 2008, always about 2008, isn't it? It destroyed so many countries around the world in regions such as Latin America and the Caribbean, for example. So from 2008 to 2021, which as you can see in this chart here, things were pretty rough. So is a lost decade coming for US stocks as well? Well, famous investor Stanley Druckenmiller, he seems to think so. And to be clear, Stanley is a guy who knows his stuff. He's been right about a lot of stuff before, including calling for runaway inflation well before it happened. And he recently said there is a high probability that the stock market, at best, could be flat for 10 years. At best. That's bad. But maybe it's not all bad. As he explains, some of the big tech giants that we see today, like Apple, for example, they were born out of the last decade. Lost decade, right? Bear markets, they're for building, they're for innovation. There's always new companies out there seeking out new solutions to existing problems. Innovation happens, which means that this period, if we do get a lost decade, will become a once-in-a-lifetime buying opportunity for long-term investors. And the reality is, this has happened before. It's going to happen again at some point. Whether that's happening now or not, that's the question we all want to know, but it will happen, right? As the world comes to the end of a long-term debt cycle, we find ourselves in a high debt, high inflation situation, which is just basically no bueno, guys. Then, of course, we can layer on top of that the energy crisis that we see brewing and all the other craziness, supply chains and all that stuff going on around the world. It's a perfect storm timing for a stagflation event to happen, which could take years to get under control. Then, of course, you have the old Federal Reserve coming in, hiking rates at the fastest pace of tightening in 40 years, as you can see in this chart here. And yes, we're starting to see the damage that this is causing to other economies around the world in real time. But the last economy that the Fed is going to crush by its rate hikes, of course, is going to be its own economy. So for the USA, stocks, it seems that the rock bottom interest rates and the tax expenses, they create a situation where profit growth just went to the moon. But it's forecast that this level of growth, of course, is unsustainable in a high debt, high inflation, high interest rate environment, which is exactly what's happening. And of course, you have the Fed stepping in here, basically trying to kill demand and just cool everything off, which means crushing markets. And the more demand is killed, the more companies will have to scale back, take a hit on profits, and of course, hope that they can just survive in this kind of situation. So for investors who like to simply buy and hold, it could be time to get comfortable, well, with the uncomfortable. A portfolio that's just in the red for a long time. It reminds me of those famous last words in investing. This time is different. Well, is it? That entirely depends on how much money central banks are willing to print in order to keep the lights on during this financial crisis. Will the show go on? Well, a lot of people are already calling for a Fed pivot as early as Q1 2023. Which would be a good sign for markets, but also just kick the can down the road. But make no mistake, this crash has been a once-in-a-generation event. At this point, the name of the game, it is to survive as an investor. Could the worst be over? Maybe, maybe not. In fact, most major analysts are saying that the worst is yet to come, which is obviously worrying for our portfolios. This is why I am maintaining a very strong cash position during all of this upheaval. Sure, I'm still balls deep in crypto, as you know, but cash is king right now, even if cash is still trash. Now is the time to be patient. Right now, we're seeing just a crazy time in markets when stocks are just as volatile as crypto. I mean, a lot of tech stocks have gone down as much as altcoins. Major markets like bonds and real estate are setting all the wrong kind of records in 2022 for how bad they're doing. But regardless of how long it takes, markets will recover eventually. And crypto specifically, I think, will outperform markets even in such a scenario. Even if we do get a lost decade for stocks, the exponential adoption of cryptocurrency technology, it's hard to bet against when you see the numbers, when you see the big picture. And I, for one, am not betting against that. I'm betting on the exponential growth of crypto. Anyway, let me know what you think down below in the comment section about all this crazy stuff. Thanks so much for watching today's video, and peace out till next time.